Welcome back to the channel. I'm particularly excited for this video because we're going to be diving into a topic that has been requested by many of you, and it's for good reason. I want to talk about sim-to-funded trading, which is arguably the most popular thing currently going on in the world of retail trading. If you don't know what I'm talking about, you've at least seen their ads. You know, all those companies promising you that if you just pass their test, they're going to give you access to all of this capital, and then finally you'll be able to be the trader that you always in your core know that you're meant to be. Sounds great, right? Well, not so fast. Like everything in this world, especially in the world of trading, there are pros and there are cons. So in this video, my entire goal is to make a well-balanced video so you know exactly what you're getting into if you decide to get into the world of sim-to-funded trading. Alrighty, let's really kick this off with a quick recap. Sim-to-funded firms give you a simulated account to trade, as in not real trading, also referred to as paper trading. In this simulated environment, if you can hit their profit target while following all their other rules, such as not hitting their drawdown limit, then you can pass this evaluation phase and move on to a quote-unquote funded phase. At this point, if you then trade well enough with the funded account, as in hitting their certain profit targets and once again following all the rules, you can then request real money out from the account straight to your own bank account. It should also be noted that there is generally some form of a profit split, but that isn't necessarily true to all sim-to-funded firms. So basically, in a nutshell, sim-to-funded firms are a way in which you, the trader, can get access to more capital without putting up thousands of dollars yourself. I think this goes without saying, but with a pitch like that, it's kind of no surprise that this tool has become so massively popular in the world of retail trading. Let's start with the positives. In my humble opinion, the biggest pro, the most evident reason why anyone should consider sim-to-funded trading is because it's a perfect transition. When I first started trading, you had two options: a paper account, as in not real trading, no skin in the game, no real risk, but no real reward. That was one option, and the other one was your own fully funded account. So kind of, what's the saying, out of the pan, into the fire, that type of a situation. There was no transition, and in a certain sense, I'm kind of jealous of new retail traders because they have this tool, which is that, like I said, beautiful transition, where you're not risking your whole entire account, but you still do have some skin in the game. I love it for that bridge in between paper trading and your own fully funded account. I know there are many thoughts and opinions on this concept, but I don't really care what anyone says. There's a huge difference from when you are trading with no risk and in the back of your mind, you know, you're just going through the mechanical steps versus your own money on the line. There's a certain emotional factor that you have to consider, which obviously makes real trading quite different from quote unquote fake trading, as in paper trading. So that's why I love sim-to-funded trading, because it's that in between where you know you have a little bit of a risk and you're still kind of going through those steps of figuring out how to use your platform, the proper execution, this, that, and everything in between. But also, if you take a misstep, the hit that you're going to take, at least to your financial health, it's not going to be detrimental. As I said, in my opinion, that is by far the biggest and most evident pro of the world of sim-to-funded trading. But beyond that, I've also mentioned that it gives you access to capital. Most people, most retail traders don't have hundreds of thousands, if not millions of dollars laying around to trade. So to have access to that capital, that's a pretty amazing thing. And also, because there are so many sim-to-funded companies, and a lot of these companies allow you to have so many accounts, the scale is phenomenal. It's one thing to make $100, $200 a day, but all of a sudden, when you start doing that on 30, 40, 50 accounts, you are talking about some serious gains. So whether you're talking about it being an amazing transitional tool, access to a bunch of capital, and amazing scalability, yeah, there's a lot of great things for sim-to-funded trading. But don't forget, there's also a dark side. There's also some cons that you need to consider. The first thing I want to talk about actually could also be considered a pro, so it's a pro or a con depending on your vantage point, but I want to talk about the very rigid, very strict rules. For any of you watching this who have used a sim-to-funded account, you know it's really not difficult to break one of the rules and lose the account. In fact, I would argue the point that some of the rules imposed on traders actively promote bad habits, and if you ever had your own funded account, you'd want to be doing the exact opposite. However, on the flip side of that coin, there are some traders, especially newer traders, who have no rules or methodology whatsoever, so I can understand how some of these rigid setups actually kind of help them develop their own trading framework. So once again, depending on your vantage point, the rigid, strict rules, I could argue, are a pro or a con, but there really are things that I would say are clearly a con. First up, profit splits. In this particular world of sim-to-funded trading, profit splits make no sense. It's all simulated accounts anyway, and basically if you're a winner, you get paid off from when other people lose because they're paying for those evals. What's the profit split for? I understand if they're actually routing your orders to the quote-unquote real market, like actually hitting the market, fully understand that. But why are there so many sim-to-funded companies that choose to do a profit split when your orders aren't hitting the market and your payouts are coming from other people's failed tests? Doesn't really make sense to me, and obviously we know the answer. They're just trying to keep more revenue within the company. This next one isn't necessarily exclusively true, but it's very common. Most sim-to-funded companies do not let you swing trade. So it's only promoting day trading and scalp trading, which if you look at the world of retail trading is massively popular, but it's also extraordinarily difficult to be successful. If you ask any actual Wall Street professional, any true trading professional, they would tell you that big money, big returns comes from riding big trends, as in not just day trading. So if you're looking to hone your skills of day trading or scalp trading, obviously this is great for you because you're not swinging overnight anyway. However, if you have an interest in swing trading or something along the lines of investing, well, this tool isn't really going to be set up for what you're looking for. And last but not least, in fact, this is actually probably the most infuriating part of sim-to-funded trading, is their loss limits. Many of these firms, if you look at how they compute their daily loss limit or anything in that particular word, if you see that type of verbiage, for example, if you have a $50,000 account and you go up to 53 and you come back down to 51, they don't look at you and say, hey, congrats, you have a $1,000 gain, and they base your loss limit off of that because that's your realized gain. That's how we would normally do it if you were trading your own account. In this particular world, it is very common for them to measure your quote unquote loss limit off of your unrealized high. If your realized high and your unrealized high are the same number, great, congrats to you. But a lot of the times, if you have any pullback from that theoretical perfect profit you could have had, that's the measurement point, which is why it's so incredibly easy to lose your account due to blowing out because of your loss limit, which once again is commonly measured off of your unrealized high, which isn't necessarily going to be your realized profits. So what in the world does this all mean when you fairly consider the pros and the cons? Well, to be transparent with all of you, I love sim-to-funded trading. Yes, I've had a very positive journey with it. At first, things were rocky and I was blowing out a lot of the accounts because there were rules that I wasn't personally used to. But all of a sudden, when I realized what the rules were and I updated my methodology, that's all of a sudden when the payouts started coming in and in and in, which was very nice when I just really had considerably less risk from my own funded account. However, on the other side, it is strongly promoting day trading, which I don't think is appropriate for all traders. In fact, I would argue most average retail traders are better off either investing or swing trading. And the one thing that makes me absolutely crazy, drives me up a wall, is most of these sim-to-funded companies, if you look at their marketing, their presentations, their anything really basically to get your credit card numbers, they're talking about how they want to partner with you, the trader, and you guys are in this journey together. I don't like that one bit, because if you look at this business model, if you look at how they generate revenue, they make money when you blow out. So as much as they do all of this marketing to say, hey,
partner up with us, we're gonna have a great time together, we want you to succeed.
In reality, do they? It's one thing if your trades are getting sent to a real market, like actual live trading. Then yeah, you might have some sort of partnership. And to be fair, some prop firms do that. But many prop firms never take you off that simulated environment. And if you are quote unquote profitable, aka successful, your payouts come from the company as in other people blowing out. So it'd be as strange as, in this example at least, and once again, this isn't exclusively true, but for many of them, it would be equivalent to when you walk in the casino and the casino's like, yeah, play blackjack with us, we're doing this together and we get that it's our game, but we hope you do well and we would love to pay you out. No, you don't. Obviously, the casino wants you to lose that blackjack because that's how they make money. These sim-to-funded companies make money by you blowing out evals. Now, I know that could sound a little bit harsh, but remember, you can technically win at blackjack. You can technically win at sim-to-funded trading. I'm just not the biggest fan of its marketing where it's like, oh, we're partners of this together. No, how about we just all be honest? You're trying to take their money, they're trying to take your money, and if you're good enough at trading, well, you might actually be successful. If you're not good enough at trading, well, they're going to take their money. So So I would just say that in terms of the marketing perspective, I would argue that things could be a little bit more honest because there's some confusion about whose interests are at stake. And in reality, you have to know who's your opponent and obviously who's on your side. And at the end of the day, when it comes to you and your own trading, you're on your own side. And I think that's actually an important thing to remember with trading in a general sense. Personally, I love sim-to-funded trading. I think it's a great tool, but obviously it does not guarantee success. I would strongly argue that it is a phenomenal bridge from paper trading to your own funded account, a little bit of skin in the game, but also you could potentially get some reward if you execute upon your trades, but you are lessening your overall risk. Beyond that, it is great access to a lot of capital and it is highly scalable. But with that in mind, it's obviously not perfect. As I've said, I think the marketing could be a little bit more transparent. The fact that people are forced to day trade and scalp trade with no swing trading, I take a little bit of issue with that. And I think sometimes the rules could be a little bit too rigid and a little bit too strict for actual trading. At the end of the day, I think sim-to-funded trading is a great tool, but it's not necessarily meant for everyone. If you're considering using one of these firms, remember to take your time. There is no rush. These companies are going to be around. Go into the rules, read the FAQs, read all the reviews on that particular company. They're not all built the same. Some of them are phenomenal and they're known for a track record of paying people out, and other ones are straight up scams. Take your time. Don't feel that high pressure sales technique of, oh, I gotta get in now. It is a great tool if used properly, but it's not going to guarantee that all of a sudden you make all of this money. Slow and steady will win the race. That's what I have for you in this one. I appreciate all the good vibes. If you have any questions, comments, or concerns, let me know in a comment below and I'll do my best to get back to all of you. I'll catch you in the next one. Peace.